What's going on, guys? Did I scare you? What's going on, guys? How are we this evening? You just kill the music a little bit. What's the levels like? Are we good on the levels? Mic check. Mic check. Are we good? Yo, music is fire. Listen, I've pinned it to the chat. Right, it's at the top of the chat right now. There's the Spotify playlist to my guy Ed Poster. Right, he's put up a few tracks on there. Go and support my guy. Go listen to those songs, man. They're all instrumentals. The guy is fire. Right, all his music is rolling off on this stream right now, man. So go and check it out. Okay. Yo, what's good, Jonathan? How we doing? Thank you, Chai. 14-hour work. My days. On Spotify, yeah, my guy. Yeah, go listen to my guys. His music is awesome. What's going on, Mike? Who we got in here? Who we got? System Hack, what's going on, bro? How are we all? Yes, we're going to get to the chart in a few seconds, guys. We're going to be having a conversation this evening about how to trade price manipulation, because today was a classic example of how the market makers really manipulate price. All right, threw off a few people. Patreons today, they got the heads up. They got the heads up and I didn't even give them a signal. All right. We broke down the behavior. We factored in the chances of one thing happening against the other. That's how you understand. That's how you're able to really work out what's going to happen next when you dissect exactly what is going on and why price hasn't gone to one zone and what are the chances of it moving to the next. The game is the game of confluence. All right. So tonight's stream, we're going to be addressing that tonight. All right. It's going to bring you into the world of manipulation. All right. And this manipulation happens all the time because they can't move price without it. That's the truth, guys. That is the truth. So, without further ado, welcome to the Traders Reality Channel. My name is Tino. I'm your host. Let's have a conversation. Okay. Now, is music at a reasonable level? Do I need to turn it down? What are we like? Mike? Can I have your approval, please? Are we good? They are all we're getting them rolled out. We're waiting for the actual infographics to be created. We've got a couple of other things that need to be addressed, and then we're going to roll that out. Levels are good. A little lower on the music. Okay. All right, then. Cool. Mike, do you approve? Where's my guy? I just answered your question, Udit, man. His BitBoy Crypto is now live telling everyone to go. Bitcoin's going to 100k. Well, look, if Bitcoin goes to 100k, that's fine. We have no objection to Bitcoin going to 100k, but we ain't going to wait until it gets there. We're going to be exploiting moves, all right? And tonight's stream is going to help you address how to catch situations where you're able to exploit the retail trader, okay? So let's have a conversation about what happened today. So, firstly, the image in front of you, of course, it's a chart. It's Bitcoin, USDT, okay? Now, if we just zoom out a little bit, we can see that Bitcoin on the 1 hour time frame has been rising, and we've been waiting for a bit of a retrace, and we got our retrace, no doubt. Some of you may be aware that the pattern has played out quite nicely, if you can see right there. We've got the rise, we've got the retrace, and we've got the continuation to the upside. Okay? Now, today with the Patreons, all right, We had a conversation, and just for the record, guys, if anyone is considering joining the Patreon, do not join it until the start of the next month, because they will charge you twice. All right? Do not join Patreon until a new month starts. All right? Leave it to the second, third, maybe, whatever. All right? But do not join it before the end of the month, because they will just charge you twice, and you're going to make life difficult for yourself, because you're going to want to get the refund. Not we won't give you the refund. I'll always give the refund, but for convenience sake, make sure you join at the start of every new month. That's how it works. Patreon, I don't know why they do that, but hey, that's up to them. Okay? Anyways, let's have a conversation again. All right? And just for the record, guys, I have got the best headache. I think I am the most fashionable person when it comes to headaches. You know, if you want to understand what a headache is, just come and ask me and I'll tell you the story of headaches. All right? Unbelievable. Tension headache, according to Dr. Michaels. Isn't it, Mike? Yeah, don't worry about the likes, man. I'm not fussed about the likes. If you like it, you like it. If you don't, it's no problem, man. As long as you're here and getting ready to absorb what we're about to say, happy days for me. So, Bitcoin. The general consensus is Bitcoin is rising. All right, we've come back all the way from this previous peak formation down here. Price rises up level 1. This extension of level 2 rise comes down and hits the 50 EMA and then makes a move to the upside. Now, today we were paying particular attention to what was going on in this zone right here. All right. Now, in a video that I posted earlier on, okay, I just want to address it with you guys. This is what we were looking for. Now, this was a video that I posted up earlier on, and we were trying to establish this move to the upside and what it was going to achieve. Price had moved down, and then it started to stabilize at the 50 EMA on the 15-minute time frame, which is the 1 hour 13 EMA. Now, what we've been seeing over the course of this move from Sunday night, Bitcoin has been holding very well above the 13 EMA. Right, the 13 EMA sort of was acting like the 50 EMA when it comes to price coming back to test support and move away from it. Okay. But what we saw right here, well, what we were breaking down earlier on today was how the importance of the Asian session that was setting up price for a move down and then effectively spiking back up. Okay. Now, this was the before. And of course, this was the after. Bring up the 15-minute time frame and you can see exactly what had happened. Bitcoin had come all the way back down and recovered this zone right here. Yeah? Look at the pins. They spiked the wick right there and shifted away from that zone. Image right there. Brought it back down to here. Happy days. They fulfilled that obligation. So how could we find out? How could we know that was going to happen? Well, we will never know it was going to happen, but what contributed to the manipulation right here? All right? So we'll bring it down to the 15-minute time frame. This is how it works with the manipulation. So we saw that Asian session had initially brought price up to the highs. So Asia were favoring lower prices. Okay? They brought price up and then come into the sessions down here with the UK session. They then ended up moving price further up. Now, this was where the 40k zone was. Okay? Now, earlier on today, on MT4, we were paying attention to the idea that we needed price to break above the 45,500, which was at this point right here in the chart. Okay? How you doing, guys? How you doing? Mad love to all of you. Okay? So this zone right here was the 40,500. Now, what do we know about whole numbers and half numbers? We know that when price comes away from that point, it comes out with notable volume. So if I bring up the 40,000 mark right here, okay, right there on the nose, look at every time they break through that price, there is a notable volume candle right there. Okay. So earlier on today, we saw that this move spiked up, came down, and then they made one last hit to the upside, which in this area here was the previous pool of liquidity. All right. Every time price moves to a previous pool of liquidity, it always pulls back. Why? Because at that point, the market maker had realized the profit on the positions he previously built. So if I zoom out, you will see that this move itself recovered this previous pool of liquidity in this area. Okay. Now, jumping forward on the 15-minute time frame, we can see when they spiked price up, the fact that there was no continuation candle told me that they were getting ready to dump price and that we were going to be looking at bringing price back down towards this vector candle right here. All right, because we haven't had a pullback yet. We haven't had any sharp moves, or the market maker hasn't actually started to take any profits from any of these shorts that they've been building to the upside. Now, earlier on, prior to this green vector candle, all right, I received a notification on my phone telling me that Bitcoin had broken through the 40K zone, right? Now, I got that notification because I'm obviously joined, it was crypto.com, Hotbit. I've got like alerts on various platforms telling me what price of Bitcoin is at, okay, and what price zone does it take. Now, can you imagine the thousands of people that have probably got the same thing? Yeah? So in that instance, thousands of traders across the world, thousands of people paying attention to crypto received a notification, right? Let's hypothetically assume that they all received a notification saying that Bitcoin had broken through the 40K zone. What do you think that's going to make people do? It's going to get them committed to coming to the chart. That's one thing for sure, right? Then they're going to want to look to trade. So what does the market maker do? He pushes price higher and higher and higher. He induces the trader one more time, gets him committed, right? Makes him believe that Bitcoin's going to go to 100K at this point, because when you go long as price is rising, you are probably the most optimistic person on earth. Nothing's stopping you. You become a moon boy. You're embracing this nice move to the upside. You don't want to miss out on price going up, because unfortunately, the retail trader buys when price is rising, okay, and the market maker sells as price is rising. Okay, he goes short when price rises because he wants to build his short at the highest possible point. Now look at where the market maker is building his shorts, above the key 40,000 zone. All right. Then what happens? They commit all the retail traders to the upside. They stabilize price for a few moments. What? 1, 2, 3, 4. They hold price in that zone for 1 hour. Now, 1 hour is long enough for them to make people stay committed to a trade because they feel that they're going to be missing out on a move to the upside like they had missed out from here and that they've missed from here as well. Okay? Then this big red vector candle comes in and breaks down below the 40,000 mark. That's them offloading the shorts, closing longs at the same time, and adding longs at the same time. They bring price down. New York session initiates a reversal to the high. London closes, and then the US reveal their hand, spike price all the way back down and take out all the guys who had gone long, hit the liquidation points and the stops, and they of course managed to build some more longs whilst they bring price back down. Now, here's the manipulation. The manipulation happened on price breaking away from the 40K zone. All right, that was it. How can you break through a 40K price movement, all right, and not continue further? It only went up, what, $700 from 40,000. So 40,000 to 40,700, not really a great move now, is it? They snapped price back. They had traders committed. We were expecting a move like this from Bitcoin. Now, granted, Bitcoin has come down once, rise, came down twice, spiked the pool of liquidity down here, as you can see the green vector candle, all right? And they shifted straight away from that point, okay? Now, what's going to happen next, right? Let's flip it over to TradingView. TradingView is showing us what we are potentially seeing as a head and shoulders pattern. Look at what's going on with the green vector candles. Green vector 1, vector 2, 3, offload, offload, come back up one more time. Green vector candle, price fails to break above this previous zone and it's pulling back. Now, if this is going to be a true head and shoulders formation, we will see price come back down to this zone right here, which will test the 200 EMA on the 15-minute time frame, which is the 50 EMA on the hourly. Okay? That's where we are. Now, another thing we need to consider. Look at the red candle, green candle formation. You've got the railroad tracks, where the wicks of each candle are pretty much exactly the same. All right? The red candle initiates the selling of the opening of the longs and selling of the shorts. Taking out all the guys who went long in the first place, you hitting their liquidation points and their stops, and the market maker uses that liquidity to offload his shorts and build longs at the same time. When they snap price back up again, they are quickly trying to realize a return. Now, how long is this move going to show precedence that it favors higher price? Well, we have yet to pull back. Bitcoin just keeps on rising and rising. Spike down, back up. Okay? They're trying to keep traders committed in and around the 40k zone. Where are we at? Let me get my horizontal line. Where is the 40k on the chart? Right here. Right? It's all about the 40k zone right now. Now, if we look closely, okay, this could be the head of a bigger head and shoulders formation. Because you can see that it's got the left shoulder here. You've got the head here. And the right shoulder's here. Now, we're going into Thursday tomorrow. So tonight's session, the Asian session, might actually induce price to come back down, test this zone, make a move back up, set it up for UK, and UK makes the move to the downside. So then by the time the weekend comes, we've got ourselves what we understand to be a potential pattern development. So if this is the M formation that we are expecting, for example, if I draw it out, we've got the rise, drop, up. Actually, I'll do it like this. Let me move this pattern here and draw this. That's potentially what can happen. All right. That could definitely be something that we should consider when we're looking at the charts, because right now Bitcoin is showing so much activity in and around this zone and it's not gone anywhere. All right. So, how do we like that? Do we understand that? I'm just looking at your comments. Gianni, how you doing? What's going on with XRP? Why now? It's just one good news. Morgan Stanley predicted it. Hope they're right. Okay, having trouble finding the right moment. I guess finding the right moment, okay, is all about your ability to understand when to get in and when to get out. Okay? So if we bring it over, if we dive closer into this chart, all right, get rid of all this stuff here. How could you exploit this move? So just jump down to the lower time frames. Jump on the 15-minute time frame. What actually helps, guys, is if you're paying attention to how price is behaving in and around the key notable numbers, such as the 40k zone, the 40,500 point. Look at the vector candles. They are spiking price higher. They favor higher prices because they want to get shorts filled at the highest possible point. And what have we always said? We have said every time a vector candle appears at the highs, that is when they turn the market. And look, it's right in front of you. So earlier on today with the Patreons, we were watching this move play out. All right? We watched them spike the high, but there was no confirmation candle. All right? Then they started manipulating the play, trying to keep the retail trader committed. Look at the 5-minute time frame. This will tell you a story. On the 5-minute time frame, you can see a little mini M formation right there. All right? Flip onto the RSI itself, you can see divergence coming in. Look at that. Making a higher high outside the volatility band. The second high back inside. Third high way below the RSI. Cutting down the market base. All right? Price had extended away from the 50 EMA. Look how extended it was. It broke the 5. It broke the 13. Bang. That was your entry right there. I'll show you where your entry could have been. That would have been your entry right there. Now, it's easy to say in hindsight. So easy to say in hindsight. But this plays out over and over again in the chart. All right? Look at this. M formation again. Breaks the 50. You would have realized... breaks the 5 and the 13 EMA, but sharply pulls straight back. Okay? So you've got your first leg of your M. Price drops aggressively, comes back up, fails to break this M. Then you've got your pattern. Wait for the 5 and the 13 EMA to be broken. Place your entry short. Right there. You would have realized a nice little return there. Let's just have a quick look at XRP. Have to move all the way up in the chart. Now, guys, look, XRP, granted, was always going to come down after this move. Always does. Whenever you see a green vector candle like this, right, and no follow through, look at what was going on. Stopping volume, stopping volume. Spike the high one more time, trap the retail trader, shift back down into the range. All right? They need to bring it back to the 50 EMA, which is right here. They bring it back down there and make a bounce away from it. Happy days. Remember, a lot of people have got squashed out today. So many shorts had got taken out. Look at XRP on the bigger time frame. Look at that, man. That is crazy zones. Look what they recovered. Look left and you can see it. Recovery of the vector zone, 1. Recovery of the vector zone, 2. Right there. They're recovering previous zones and they'll use news to do so. Okay? They will use the news or any information that they can move price just to trigger price to get to the zone that they desire and then shift out of the zone again and grab all the traders who've been going long here. The sad truth is, guys, there were traders that went long here and here because the only way that this candle can become a candlestick is if there are orders being placed and taken. All right? Yeah, I'm always... I believe this actual headache is tension. I was speaking with Mike about it today. I'm always looking up and down to the side with the mic. It's crazy. What would invalidate my thesis on this current head and shoulders? Pretty simple. On the 5-minute time frame, we can see a nice head and shoulders developing. Drop onto the 15-minute time frame, you can see that head and shoulders again. All right, just this little zone right here. Flip over to the 1-hour time frame. We've got this bigger pattern as such, which isn't a fully fledged head and shoulders just yet. We may get the move down and one spike back up and then move down again to recover this previous pool of liquidity that we see right here. Where is my box? There it is. This pool of liquidity right here, the 35,200 zone. That's what I'm expecting them to do because that will sit in line with the 200 EMA. That's a good point for me to determine. Now, what would disprove this thesis about the head and shoulders? Price continues to go up. If it holds the 50 EMA right here and price continues to go and takes out the previous high and closes higher, then the head and shoulders becomes invalid and we will be looking for another retrace back to the 50 or a pattern to develop in some way. Remember, guys, the market makers have to execute repeatable patterns because they can't deviate from the norm. They can't do that because they will break their own business model. Their business model is designed to get traders committed at the worst point in the chart. Look at it right here. Look what happened on this green vector candle, green candle, red candle formation, drop. Now red candle, green candle formation is slightly pulling back. Recovery of the vector candle by 50%, then initially make a move back up. We will only know if they favor higher prices if this zone holds. Okay? Chinsey, if you're having to ask if you need to close your trade if you're up 100k, come back to me when you ask me again, should I close my trade? It's up 50k. Would you rather say that to me or would you just rather stay 100k up? Take your trade, man. Pay yourself, bro. It's not profit until it's closed in your account, staring at you as a six-figure sum. An example of a confirmation candle would be here. Look at this. On the 1 hour time frame, let's look. This is an example of a confirmation candle. All right, but it's a bit of a tricky one because price had closed up here and it still had a wick. Price had opened here, spiked lower, and then came back up. All right. So initially, a confirmation candle would, I mean, here we go. This would be deemed as a confirmation candle. So there's the green vector candle. Price opens strongly and then continues up. There's your confirmation, and then price continues to rise from that point and spikes higher as well. All right. What you're looking for with confirmation candles is if the intention is to move price higher, the next candle that is preceding the vector will initially make that continuation to the upside. If it doesn't and it closes lower, you know that you're in a bit of a tricky situation, or should I say a manipulative move, where they're just tricking traders to get committed. Look at this vector candle. Price hits the high, and then the red vector just triggers and it drops price. Drop down to the 15-minute time frame and you'll see it for yourself right here. Look, we see a green vector candle right there. Price comes up, fails to close at the highest point in the vector. The next candle can't even break above the wick. So you know that this move is a bit of a fake move. And what do we know about the market makers? What do? They move in threes. 1, 2, 3 pushes to the high. Manipulation, hold it for an hour, drop. Yeah? Because they need to wait for the retail trader to get used to the idea that Bitcoin has now broken 40k. That's what we need to get. That's what he needs to wait for. He waits for that. And this is, believe it or not, the New York start. This is when New York rolls in. 8 a.m. I believe it is. Yeah, 8 a.m. Perhaps our question out of context a bit. How do you manage your taxes on every order? Any website that helps you do it yourself. How do I manage my taxes on every order? Well, because I trade Forex. So I don't get taxed on Forex earnings. So I don't really have that issue with it. Could we talk about the big wick that hit 48k? Yes, the big wick that hit 48k. Where is that on Binance? Where was that? Is it present here? I don't see it on here. Oh, am I looking at a different chart? The big wick that hit Binance. Look, you're trading a third-party platform. All right? There are obviously lots of orders on that platform in and around that zone. They spiked that and hit the liquidation points at the same time. What a messed up thing. Welcome to trading. You know? It's the perpetual contracts. Okay, let's have a look. Okay. That's just orders, my friends. There are orders there. This wick can only become a wick if there are orders there. Now, by the principle of the wick, right? Because there is orders up there, just because it spiked it and pulled back down, doesn't mean that everyone is liquidated, because we don't know how much people have in their bank accounts or their trading accounts to absorb such a big move. There are probably traders right now that are still long and they're in a drawdown hoping that price slowly rises back up and recovers this wick. Okay? In my history of trading, every wick that I see like that, most of the time it comes back and recovers it. Alright? But that is only on the basis that Bitcoin does continue higher. Before it actually recovers that wick, it might drop down lower, then come back up again. All right? Granted, if people are talking about Bitcoin going to 50, 60, 70, or even 100k, then granted, yeah, it's going to recover that wick. But to technically make this statement that Bitcoin is going to recover that wick, there would have to be a number of probable factors that come into our favor for us to determine that. For example, if Bitcoin holds on this 50 EMA on the 50-minute time frame, if it holds above the 50 EMA on the 1 hour time frame, okay, because the trend is moving higher. All right, they are moving higher. This big green vector candle right here is a strong candle. All right, red candle, green candle formation. They still want prices to rise. All right. If we look on MT4, we can see where the next pools of liquidity are at. Let me pull up this chart right here. No, it's not that one. It's not that one. Here we go. So this is my liquidity chart. This tells me where are the pools of liquidity with Bitcoin. Look at that. All three pools have been taken right there. We've had that one taken right there. If we look left, we can see it's right, a little liquidity pool right there. We've got this point up here at 41,000 as well. That is a point in the chart that they may send price to. So we draw off our liquidity pool right there. So they kind of tapped it as well. The next point in the chart will be as follows. We've got this pool of liquidity, which sits at the 51 and 54. And then we have this pool of liquidity, which is the 49-47 zone. Okay? Just looking at the chart itself. 1, 2, 3 hits to the low, shifting out of the zone. All right? They need to start making their money back now. They've been giving too much of it away. Because remember, when the market maker comes to the market, or when the retail trader comes to the market maker, he needs to be there to fulfill an obligation. All right? When the retail trader buys, the market maker sells. When the retail trader sells, the market maker buys. That's what happens. This is the dynamics. This is the business model. Okay? The business model itself is designed to be against you. All right? Now, there are a lot of guys who were trying to catch shorts with this move to the upside here. All right? Now, the only reason they're trying to catch shorts is because they listen to the conventional wisdom of supply and demand. Who wants to hear a story? Oh God, John, I was waiting for someone to say that. No jumpers, please. Yes, jumpers, jumpers, jumpers. Yeah, everyone want to know jumpers. How many of you are new to the stream right now? Type 1 if you are completely new to the stream and it's your first time passing through to the Traders Reality stream. PC Shed, what's good? There we go. Crypto Keeper, I know you ain't new. All right then, here we go. The story of jumpers. The story of jumpers is going to help you understand why the concept of supply and demand doesn't really apply in the marketplace. It only applies in one place, and that is in retail. Why? Because you're dealing with tangible assets. All right, you're dealing with something that you can physically hold. Okay? So let's have a conversation. Let me bring you down to the chart right here. The law of supply and demand. Here we go. We're all in agreement, okay, that when price is rising, people tend to believe that the buyer is in control. Well, by that token, we are wrong. Because in order for you to buy, someone needs to sell. Now, why does price drop whenever it hits a high? Why does it drop whenever there is a spike up or notable volume hitting the highs? Well, I'll tell you why. It's not because there is no demand, okay? Because that's what supply and demand tells you. All right? Supply and demand tells you if there's not enough demand in a spot and there is lots of supply, naturally, you're going to reduce the price. All right? So let's take the gentleman that has a clothes shop. He sells 3 jumpers, 5 green ones, 5 blue ones, and 5 red ones. All right? He opens his shop. He welcomes his customers. At the end of the trading day, he starts to take a stock check. He finds that he's got no green jumpers, 3 red jumpers, and 2 blue jumpers. By the concept of supply and demand, it states that he needs to stock up on more green jumpers. Why? Because people favor that. He hasn't got enough supply for the demand. All right? But when we try and apply that same concept in the chart, it doesn't work. Because for every price movement to the upside, every big green candle that you see, it's the retail trader getting his order filled by an order opposite. So when the retail trader is buying, the market maker is building his shorts. You can only buy if someone is there to sell. You can't walk into an empty shop and demand to buy everything if there's nothing to buy. The guy at the counter will say to you, sorry, my friend, there's nothing for me to sell to you. You're stood there with your money saying, but I want to buy something. And he says, I got nothing to sell to you, bro. Get out. Why are you even in this shop? Why am I even in this shop? I can't sell anything. Yeah? When price comes to the highs, the reason why it turns is because the market maker has trapped enough liquidity to the upside. He's got enough traders committed, providing the liquidity to favor higher prices. Now, the market maker wants to realize a profit on his shorts because he's been building his shorts as price rises. The market maker doesn't sell short when price is dropping. That's what the retail trader does. The retail trader goes short when price is dropping. The market maker goes short when price is rising because he wants to grab the highest possible point in the chart so that when he breaks down price, he can drop it and make a fat killing off it. So the reason why price turns is because the market maker has committed enough liquidity in this area to offload his shorts. Remember, retail traders are setting stop losses in this zone. They're putting stops here, 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 and finally up here. All these stops, all these liquidation points are points in the chart that the market maker has visual view of, and he knows that he can offload his shorts and start realize a profit by taking the liquidation points from these guys who have gone long. Because look, when you go long, right, when you're in profit, where do you think you get the liquidity from to close your position at a positive expectation? Where do you think you get it from? You get it from the contract that was sold against you. So your profit in your long, right, comes from the contract that was sold to you as a short. Likewise, when your long position is negative, okay, when you close it, that liquidity goes to the market maker or to the order that was opened against you. It's an equilibrium. People that believe that when price is rising, it's because the buyers are in control are going to be the percentage of traders that continuously lose. All right? People that believe that when price is dropping, the sellers are in control are also going to be the percentage of traders that continuously lose because you're not seeing it the way it's being delivered. The business model is not designed to simply open a book and see how the market works and then come to the chart and trade it. No, doesn't work like that. All right? Look at today's price action. They trapped the retail trader at the highs. Do you think the moon boy came in at this point and said, hold on, guys, it looks like there's a bit of a supply here. Let's calm it down. We don't favor higher prices. Moon boy wants to take a break. You know, he likes to, be conservative with his gains. No way. The moon boy, if it was up to him, he would continuously be buying and holding until it doesn't stop. All right? He just won't stop because, and I'm making reference to the moon boy because the moon boy is irrational. right? He gets excited. Now, the market maker exploits that. That's why there will never be a supply and demand aspect in the market, because you're saying that if there is a supply and demand in the marketplace, it means that the market maker effectively doesn't have an understanding of where price could go next. He knows where he wants to send price because he's got control over the orders that are set when price moves in that direction. Each candlestick is created because the market maker fulfills an obligation. He makes it happen. All right? In My Hero, that possibly could be it. If people are all talking about the 42 zone, the market maker then has the insight into believing that, yeah, okay, if people are favoring the 42k point based on all these indicators that are available out there, like your Fibonacci's and all your triangles and all your, whatever else indicators, retail indicators that are out there from a book that you found on Amazon, okay, then the market maker is going to facilitate those orders. Because remember, he can be as irrational as he wants to be. His pockets are deep, but he also wants to realize a profit. All right? There's no point in having lots of money and not doing nothing with it. Okay? All of these indicators that are out there, that retail traders use, that pay for, that read up on, no one's paying attention to the business model. This is a business model, guys. This is what the market makers do day in and day out. There are three things that are going to help you understand the hybrid system, which is what we are talking about today. Timing, notable candlesticks, and repeatable patterns. When you combine all of those three aspects, you are significantly improving the way you trade, because you're trading in line with the business model. You're saying to me that an indicator that you've read up about, or you brought a book on how to day trade, okay, it's going to tell you that the market makers, that it's not going to tell you the business model. Straight up. Anyone that sees a green candlestick believes that price is rising because the buyers are in control. Well, you're completely knackered from that point if any book tells you that. You're going into the wrong philosophy. You're using the wrong knowledge. Why is it when price is rising, it's the sellers are in control? Why are they telling people it's the buyer that's in control? So you're saying to me that the retail trader is in control of the market? No, he's not. If he's in control of the market, you would get a continuous rise to the upside. But in order for them to get the rise to the upside, there has to be someone on the other end giving you that order. Market makers make and they take. If there's something that you take away from this stream tonight, guys, all right, it's you have to understand the business model in trading, whether it's in crypto, whether it's in stocks, forex, commodities, whatever market you are trading, okay? There is a specific business model behind it, and it's a repeatable business model because there are two factors that the market makers can exploit continuously, and it's been around for thousands of years. The idea of fear and greed. That's why these patterns don't change. The goal of ourselves, the goal for us is to try and find when these patterns when the patterns actually come to fruition. All right? Our goal is not to try and beat the market, it's to follow it. Follow the business model, follow the money, the smart money, not the dumb money. All right? The dumb money is the money that comes here. Look at all this dumb money here. Dumb money right there. Dumb. Dumb. Stupid. That's stupid money. Okay? That's the retail trader. Oh my God, Bitcoin's just broken through 40k. Quickly, let me get my phone out. Let me start buying Bitcoin. And you're in a loss. Okay? You're in a loss very soon. You've waited all this time for Bitcoin to break the 40k zone. You've gone long right here and your liquidation or your stop has been hit. Now what? What do you do next? Oh, you go short. Okay, so you go short. You see a bit of profit. Guess what? Spike back up. It's a treacherous place to be trading, guys. Trading is the hardest, easiest way to make money. All right? And you need to just prepare yourselves for what you're getting involved in. Trading is not for the faint-hearted, guys. All right? The only way that you can improve your ability as a trader is if you train your eyes to see what needs to be seen, not what you think has to be seen. Okay? Just because you see prices rising doesn't mean the buyers are in control. Okay? When price rises, the sellers are in control. At what point will the seller want to start initiating a profit on those situations? All right? Maybe. You got that bingo going? Mad days. You guys playing bingo. Who's won on the bingo? What could be the next move here? All right. Trading is all about a mental game. This game is 90% psychological. It has to be. There's no two ways about it. And prove me otherwise. Prove me otherwise. Look at how price makes the move to the upside, the 40k zone. Now, the reason why we're talking about the whole numbers here, all right, I'm sure you guys are familiar with pricing phenomena in marketing. All right, so you're going to a shop, you see something priced at £24.99. Psychologically, you don't see it as £25. You see it as £24.99. All right, so you don't feel that much of an impact on the charge of what you're buying. Okay, it's £24.99. However, whenever they want to promote a discount, it's always whole numbers. £100 off, £50 off, £2,000 off. Always the numbers that they want you to do something about. Okay, are always in bold writing. But when it's something that you need to pay for, they're quite subtle with it. £24.99, £16.99. All right, it's not bold, like 100 quid. All right, the same thing applies in the markets. Go and have a look at Exo charts. Go look on Trading Light. Pull up all the whole numbers and the half numbers, and I can guarantee to you that is where most of the orders are sitting at. All of the orders, if anything, are set at whole numbers and half numbers. When the market maker brought price above the 40k point here, this was the signal that they were going to change price. They were going to change direction. They spiked above the 40k point, hit the shorts at the highest possible point, got the retail trader committed, hold it for an hour, then tank. Come on, man. You're saying to me it just broke through the 40k zone after being so far down below at the 29,000 point. It's halfway up towards 50, near enough, okay? And it stalls. Please, come on, man. Please. Different story, man. Why would the MM go for the vectors at 37 if he wants prices to stay high? Why would he go for the vectors at 37? Where's 37? 37. I'm guessing you're talking about this zone right here, or are you making reference to this zone right here? Well, look, if he's got people trapped up at this point here. Now, remember, guys, just listen. The principle is that they always bring price back down to the vector points. All right. The idea of us trading this strategy is to find out when. And the only way that we can work out when is if we start seeing a confluence of things happening on the chart. So you can see that is a potential head and shoulders formation on the 15-minute time frame. Notable candlesticks are appearing above the 40k zone. The 50 EMA is pretty flat. The 200 EMA is in nearby. Okay? Looking on the RSI on the 15-minute time frame, we can see divergence coming in. As it's making highs, it's coming lower. All right? We have been extended and price has been moving up quite far to the upside. We're expecting a little bit of a retrace. We're coming into the weekend very soon. Thursday tomorrow. All right. What will they do tomorrow? Will they spike price higher? And then come Friday, they hold the zone. And maybe at the weekend, they drop price. Or they could just simply continue up. Because remember, we've got pools of liquidity, guys. Look. That's where price is right now. Got a pool of liquidity here. There is a zone right there. I haven't drawn it out. Let me just get it drawn out for you. There's a zone right there which sits at the range weekly high which sits at the 42,590 mark. Right? Now, the reason why I'm talking mainly about Bitcoin, because the activity is on Bitcoin. Bitcoin is the star of the show. All right? Ethereum, on the other hand, look what's going on with Ethereum. They're doing their very hardest to hold this movement. Okay? I believe that the fractional disparity is coming into play. Does anybody remember when Ethereum was making its move to the 5K zone? We always saw that as Ethereum was rising, Bitcoin and XRP were holding. And then whenever Ethereum would hold or consolidate, Bitcoin and XRP would make the move. Well, look at Bitcoin. Look at XRP. And then look at Ethereum. All right? This is what we need to pay attention to. When you see Ethereum holding and Bitcoin and XRP moving, they're moving money. All right? Money's going from one coin to the next. All right? Is Ethereum going to see another move? Because Ethereum has got this pool of liquidity right here that it's going to look to take. There's no reason why it won't take that. Look at the confluences. Holding above the 50 EMA. Sharp movement down. Look, they're building below the key 2,300 zone. Okay? Building longs below the 2,300, getting ready to shift out of the zone. All right? Bitcoin, on the other hand, zooming in, is just trailing slowly to the upside. Stopping volume candle right there, by the way. Look at that. Stopping volume. Stopping volume is a candlestick that appears when the market makers have been manipulating a zone, sending price up and down in a certain range, and they don't want it to go any lower or higher. By the token of this stopping volume candle right here, could imply that they don't want price to go lower yet. They may still favor higher prices, but you can see the divergences right there. And this is on the 4-hour time frame as well. The RSI is now pretty much flat, so there's no clear direction. Okay? Now, for anybody that is new in the stream, if you are wanting to get these vector candles or download these indicators on TradingView, okay, you got two options. Okay, you can go and use IC Markets. All the links are in the description. Okay, these indicator candlesticks that you see here were designed for Forex. All right, I started this channel back in January because I wanted to see if I could apply the same concepts of Forex in cryptocurrency, and it looks like it's doing pretty well so far. Okay, now you can download these indicators in the Discord. All right, so that is also in the link in the description as well, because it's all free of charge for you guys. There's no cost to downloading this platform or getting these indicators. Everything you need is in the Discord as well, so make sure you get over there as well. Okay, and just join the community, guys. You know, the Traders Reality family is big, but it's helpful at the same time. Got mad love in that community, man. It's crazy. Midweek what? Oh, stupid thing. You need confirmation then. Alright then. Midweek reversal. Well, technically it's still Wednesday, bro. We could be going into the reversal very soon. Well, to be fair, actually, the reversal itself, depending on when you see it and what time frame you see it on. Alright, because we did have the reversal from this high today. The reversal came in and it came straight back up. There's your reversal. What do you understand as a midweek reversal? Does a reversal mean it needs to go from 40k all the way down to 36 to deem a valid reversal? Come on. You know, you're operating in the realm of uncertainty. Anything can happen. You know? Alright, and guys, I'm going to be finalizing the stream. Okay? I just want to thank everybody for passing through. If you are new to the channel, please make sure you like and subscribe. All right. We'll be back again here tomorrow at 10 p.m. And remember, if you are looking to join Patreon, don't join it until the start of the new month, guys, because they will double charge you. That's nothing in my power that I can do anything about. That's just Patreon for you. I'm just warning people right now. Okay, don't join it yet. All right. So, mad love and respect to anybody that is here. Pattern watchers, you know what you need to do, guys. Let's hit it up in the Discord. Be careful of what's going to happen next in the Asian session. We may get a little bit more of a spike to the upside. If we get a spike to the upside, happy days, but just be mindful. They may change direction at a moment's notice. They do need to see some profit on the previous profits that they've earned earlier. They need to see a little bit of profit from these moves also. Okay? So just proceed with caution. They've hit the highs once, twice, third, fourth time, and it's not really gone anywhere. All right? Notice how it's above the 40k zone. Okay? So trade well, my friends, and I'll be speaking to you tomorrow. Peace.